22,800 is that best friend for Nifty right now.
Why did you guys not speak when it would fall? Or why didn't you guys give us a heads up?
A slightly risky lump sum that I made, understanding that it's going to be risky, I gave it only a very small allocation. I didn't want to play with my money so much.
I'd like to keep my at least equity investments and investments into stock market very simple, very basic.
Equity today is overhyped in India.
What is the amount when you say lump sum that you are investing in?
I've been doing 10 lakhs whenever I'm doing a lump sum.
So that tells you have already invested 50 lakhs.
I have a lot of money invested in gilt funds and debt funds.
So a large chunk of money goes into my bank. Do you think that is the right approach?
60% of my SIP amount used to go into large cap, 25% used to go into mid cap, actively managed mutual funds, and 15% into small cap. All of this I'm replacing with.
I know it's a risky play. Now, we are all responsible, by the way. Right?
Absolutely.
Yeah,
Absolutely.
we made our investments very public here. Thank you to everyone who watched our last episode of the Aftermarket Podcast and commented very happily under it. So one of the major comments that we saw under the last episode was that, where are you guys investing? What are you doing in this market fall? And that's what we're going to talk about in this episode, the 14th episode of the Aftermarket Podcast. So we'll be getting very, very in-depth into what has been our investment strategy, where we are investing into in this market fall, exactly into mutual fund names, stock names, if there are any, and getting or tearing apart our portfolios and showing it in front of you. That's our goal with this episode. And the only ask here is, do not take this as investment advice. As always, our goal is only to give you that spark, give you that one thought of or intellectual curiosity that makes you want to start getting invested into the markets. So if that's the case, let's get started. So 2/3 of February is already done. And this is the 5th month where Nifty is down or in the red consecutively. I don't even remember the last time Nifty was this way. I in fact even looked at the last multiple years of trading candles.
Yeah.
And I think the last time this happened was in 2008 or even before that. So again, market participants feeling the pain. And Nifty taking support, huge support at 22,800. It's like you have a lot of trust in your friend, your best friend, and 22,800 is that best friend for Nifty right now. I think 8 times is what Nifty has taken support there.
Yeah, people are, even when I was going through the comment section and all, you guys are coming and talking about the fall and the bearishness and the negativity now. But why did you guys not speak when it would fall? Or why didn't you guys give us a heads up?
Only if we had the superpower to predict what would exactly happen.
But again, if you actually remember, we've been talking about markets being very weak. Yeah. It could be bearish. It could be a sell on rise markets. Even in our podcast from last 2 months, we've been reminding people. Yeah. So, whoever is commenting, you just have to watch back all our videos, get amazing insights and value. There is always market moves in a pattern. So once you see the structure, you see the pattern, you can understand if there is major bearishness or slight bearishness, you can figure it out and understand and just invest accordingly.
Yeah, I'm still stuck on how you started the podcast saying that it's mid of February. Yeah. Man, it's the mid of February already. I still remember
February,
New Year
is done.
Yeah. I still remember New Year like yesterday, but yeah, time is passing.
So actually, I was seeing this memes. So January was like the slowest month ever. People were worshipping when would January end, January ended, and then February flew.
So I think that's where people are feeling the pinch, right? Let's be real. Markets falling, even though Nifty has fallen by 13%. Small caps and mid caps have been ruthless. Yeah. Even in our last podcast, a lot of people got to know or got to share their pain with us in the comment section, where the mid cap index and the small cap index have fallen by 20% each. Some people's portfolios from their all-time highs have fallen by 30% or even 35%, right? And that's not a great place to be at. And that's where we want to officially start the Aftermarket Podcast, the 13th episode of...
The 14th episode?
Yeah, 14th episode.
The 14th episode of the Aftermarket Podcast. And that's the story for the week, I think. What people ask us, right? What do I do when such a market fall happens? So let's discuss about that.
Yeah, a lot of people in the comments were asking, hey, you guys are talking a lot, but what are you actually doing when the market is falling?
What is happening in our minds? How are we taking this?
Not just in your mind, practically where are you putting your money? What exactly are you buying? Are you selling anything and all of those? So makes sense. So let this be a very practical, open discussion conversation around what exactly are our investments and how we think, how we are navigating this difficult times in the market. So yeah, let's definitely do that.
Yeah. So I'll start.
Before that, you have to introduce yourself and us again.
Yeah, okay.
So,
I just forgot. So yes, introducing all of ourselves. My name is Ajay Ajith. This is Nihaal Bandapally. And this is Sharique, CEO and co-founder of marketfeed.
Hi.
So let's get started. So let's do this very interestingly. I'll start with my story, my investment journey in this last 1.5 months. Then Sharique can go ahead. Then Nihaal can share your story as well. So
very interesting. Looking forward to hearing your stories to know what you guys are exactly doing in this world.
Yeah. So there is this platform called MF Central where you can track all of your mutual fund investments, and it's managed by the official back-end agencies, right?
Aggregators.
K Fintech and CAMS.
You can do these on, say, platforms like Grow as well today.
Yeah. So I find this very interesting because I feel like I can trust them with that data because they're anyway handling it, right?
Yeah.
So after one of our previous podcasts where we discussed Nifty strategy indices, and very specifically inside that we talked about a Nifty Alpha 50 index. I actually made an investment into that, and obviously if I made an investment at that time, it would be in a loss right now because the market and mid cap, small cap has corrected by so much. That's only constituting 4% of my portfolio right now. It was at slightly higher, but after the recent fall, it's at 4%. So a slightly risky lump sum that I made. Understanding that it's going to be risky, I gave it only a very small allocation.
So that's where I need clarity. So are you saying you did a lump sum in Nifty Alpha 50 over and on top of your existing SIPs, which are still continuing? Did you do something with your SIPs?
So right now I have my SIPs running that haven't touched that, right? Over on top of that, I invested a small lump sum into a Nifty Alpha 50 index,
Got
right?
it.
And so what I want to bring out of this is that I knew it was risky, especially market was in a dip even at that time.
Yeah.
At what level did you invest around?
Not sure. Maybe from there, the index has fallen by 5% more from there. So you can make the calculations, right? So I understood that it could be a risky proposition, especially since it's an alpha index. Whenever the market falls, it could underperform the market.
Yeah.
Put in only 4.5 to 5% allocation, and now it's down accordingly, right? That was one of the indices that I invested into.
So is that a 4.5% allocation of the liquid funds or the lump sum that you hold, or is it the portfolio, that the entire portfolio you have 4% you have allocated? What is like the math there?
Yeah, so of my portfolio, it's around 4%. Actually, there is some extra cash or not invested amount that I'm not counting.
Got it.
Out of the invested money into equity and debt. Not talking about gold also. That's also a separate part. Out of equity and debt portfolio, 4.5% around is in Nifty Alpha 50 right now.
Now, maybe let's talk very fundamentally here. What made you invest into, and again, just bringing in clarity, I'm believing when you say you invest into Nifty Alpha 50, I am believing you invested into mutual funds, index funds, Nifty
Index
Alpha
funds.
50 index
Bandhan.
fund,
Yeah.
Bandhan from
Yes.
the house of Bandhan AMC. So like maybe let's break it down, speak very basically fundamentally. What made you invest into Nifty Alpha 50, which is, as you rightly said, a very high volatile equity instrument which is investing into mid cap, small caps. Why did you not invest into a large cap mutual fund, a Nifty 50 index fund?
At the same time, I actually invested into 2 more funds. So that was
Again lump sums.
Yeah, again lump sums.
So you're
So one of them was Nifty 50, classic Nifty 50 index fund. The second one was a Nifty 200 momentum index fund. Made allocations into both of them. In the Nifty 50 index fund, I put in 15%. Again, right now the mutual fund holding would be 15% there. And into the momentum fund, again, I put in only 5%. So what I was thinking was, hey, I have some corpus to invest. Market is down right now. But I don't want to take the risk of investing into momentum or alpha indices with a huge exposure. So what I did was gave them a smaller exposure. If it bounces back, hey, great. Right? Who doesn't want their mutual fund or stocks to go up?
Yeah.
So gave them a low exposure, gave the larger exposure to Nifty index fund. So this is over and on top of whatever is my existing portfolio, existing SIPs. Understanding that there was a slight market correction and a decent opportunities while sitting on cash, decided to make that investment.
I'm subtracting some points for investing in the Nifty 50 index because we've discussed about some better index, strategy index, which is similar to Nifty 50, which is much better, which I actually invested into. We'll talk about that, but subtracting some points for Ajay.
So,
but
again, there is the whole new pathway in my mind which has opened up to strategy indices, and I see it as a new tool which can be used to make money. Right. At that same time, I didn't want to play with my money so much.
Highly subjective, personal. I respect your decision.
Highly subjective. So hence, I really wanted to. If I'm investing into a strategy index, it should be a high risk, high return proposition.
Correct.
Hence, went into alpha and momentum with the smaller exposure.
What if it is high return, low risk?
I understand. No. So
We'll go there,
again, there is still some lump sum capacity left for me personally. Would love to get into that.
But I
Nifty
appreciate
50
that.
value 20 was something. We talked about, and I wholeheartedly agree. Right. So it's not like I'm not standing behind our words or not believing in what I said. In my watch list as well. Actually, now trying to. I got a decent NAV earlier. Market fell again. Now there's another proper buying opportunity still existing in the market.
But again, what you've been doing, Sharique? So like how Ajay has been investing. What is your portfolio? What is happening there?
Yeah, so one thing I thought about is like what Ajay also thought. I hope, Ajay, your rationale was also market has fallen. We don't know how much more it will fall from here, but we have some free extra money with us. So let's buy more mutual fund units at lower prices.
Yes,
or more units. Let's leverage this opportunity to get more units.
So I would suggest everyone to go open their mutual fund platform. If you're doing your SIPs, you can see your SIP history and you can see that you've been automatically buying larger units for the same SIP that you're making. So if you're doing a lump sum, for the same amount that you are planning to invest, you'll get more units at a lower NAV, right? Lower cost, more units. That's what will be happening. Your average cost per unit could come down.
So again, my rationale is also the same. Just because the market has come down so much, it definitely looks like a buying opportunity. And what I have been doing is, as and when market is falling more and more down, I'm doing more and more lump sums. So I think from September till now, I've done already 5 lump sums across market levels. So I've been doing right from the moment Nifty broke 24,000, right from there whenever it is moving down, again with no clear rationale as to timing the market.
I have questions there.
So I'm just seeing technical levels being broken, supports being broken. I'm just doing lump sums into again strategy indices because we've been speaking about that. So again, now coming, we are aligning on the fact that I also invested into Nifty Alpha 50 mutual funds. So money went in there as well. Again, high return, high risk. Then I invested into Nifty 50 value 20. Well. So that's
standing by your word.
That is my go-to large cap mutual fund investments now. No point in investing in anything else. So that is something that I did. So Nifty 50 value 20 and Nifty Alpha 50. So I did my lump sums.
So when we're talking about this, I do understand that first we'll be talking about my investment, Sharique's investment, and then getting into Nihaal's. Then also we have to talk about certain mindsets or certain questions that will come up, right? How should people also manage their investments right now? Or again, these are not ideally investment tips, but then few tips and tricks or a few hacks that we can suggest that maybe people can think about. So Sharique, I have a lot of questions in your investment journey. I think
please shoot. Let's take them.
So I think the natural question or a natural follow-up for Sharique would be, where is the money coming from for 5 lump sums starting from September to right now?
So adding to Ajay, so now Sharique has made 5 lump sums like you said, right? So is it like unlimited supply of lump sums that you have, or is it a certain X amount of lump sum that you have? And you said that, okay, I'll make 10 parts of this lump sum and I'll invest. Do you have a number, or how are you even, or is it pure discretion? Like, what is your rationale or thought behind this lump sum even?
Great questions. So I think the first point is like, where is this money coming from? Given that, again, so I'll add that as well. I've been continuing my SIPs as such. I'll talk about how does my SIP look like, the composition, the changes being done there. Let's discuss that later. But so my SIPs have been continuing, and on top of that, I'm doing 5 lump sums, and the question is very real as to where is this money coming from?
And as an audience, I don't know if we'll we'll keep this in the video. But as an audience, I think they'll also be curious. What is the amount when you say lump sum that you're investing in?
No, so I've been doing 10 lakhs whenever I'm doing a lump sum. So that is the kind of lump sums I'm doing. So
that tells you have already invested 50 lakh.
Yeah, correct. So I get to do that because multiple reasons. So the first reason itself is the fact that I have the luxury to do this as well. So maybe there are, and maybe my answer is not even relatable. So I'm not even sure how would this even make sense to someone who doesn't have the luxury to do this. But then I tend to have that luxury, and that being whatever is my income, it doesn't get drained out at the end of a month from my expenses plus my investments. So even after my expenses, even after my investments, which is my SIPs, which I do on a monthly basis, even after that, there is a surplus which goes into my bank account. So that also gets added up over time. And that got added up over the last many months when market was only moving up and up and up. I never had to use it. And though that's my extra reserve, I might only touch it when maybe I need to buy something discretionary. I need to go on a trip.
Or when the market gives you an opportunity.
That is my reserve, which I use even when the market gives me an opportunity. And that is what I've been using. And that amount is slightly higher for me because of whatever I'm doing. So that has been built over time. And then I'm tapping into that reserve. I would have tapped into that reserve for, again, going on a trip, buying something luxurious for me if I need it, or even any discretionary spend. So that is one big source for me.
So before you continue, so when we talk about how we utilize our money, so you get a certain X amount of income, and how you invest and where you are going to spend, you plan it, right? So now that you're saying after I do investments and after I get my expenses sorted out, so a large chunk of money goes into my bank. Do you think that is the right approach? Because most people try to put it in a place where they get more returns, or they try to optimize something. So do you think large chunk of money going into a bank account is a good thing?
A great question. So that's where you have these auto sweep facilities from banks today, where post a specific ceiling in your bank account, it automatically goes into an FD.
Correct.
So that is a great facility I've been using. So it is in an FD, making good amount, and all my investments otherwise is in volatile assets like equity and trading and all of those stuff. So this is again a very good reserve for me, which is making good returns in a FD, auto swept into it, and also I get to use it whenever I need it for boosting my returns on my equity.
And I think just to be clear for the audience, whenever we talk, or even when Sharique is talking about FD, considerable amount of your money is still going into equity.
Absolutely.
So this is like a small portion. Let's say when we actually made the video on monthly investment, we said, hey, keep aside 5 or 10% of your monthly investment into debt component, so that you can catch opportunities like this.
That is next point I'm coming to, where I'm getting the money to invest is also because I'm trading options with pledged assets.
Correct.
I have a lot of money invested in gilt funds and debt funds, which again is needed as cash component. So that is also a pool I have access to. So if there is a real opportunity in market, I have that money invested into debt funds and gilt funds, which I can sell because they are not affected by market volatility. I can sell them, use that money to buy more equity. That is also something that I could do. I tend to do if the situation.
So these are the investments that you've already made as of today. So I've also made Nifty 50, Nifty Alpha 50, Nifty Momentum 200, and Nifty 50 Classic Index Fund. 3 index funds I've invested into. So similarly, you have done investments into these. Is there anything that you're planning to do next? Because I also have
absolutely. So one thing is very interesting. So given all this narrative of how gold has been doing and how gold is actually performing really good, as much as equity maybe, and hedge for equity is something that we've always been discussing. So I'm considering to increase my exposure into gold in my SIP component. So that's something in works. And number 2 is, again, speaking about strategy indices, and it's very clear that all of us here are in love with strategy index funds. So I've been doing my SIPs into actively managed mutual funds, like from Parag Parikh and Quant and Canara Robeco. I'm not going into specific fund names. So I used to maintain, speaking about my equity mix, 60% of my SIP amount every month used to go into large cap actively managed mutual funds. 25% used to go into mid cap actively managed mutual funds and 15% into small cap. All of this I'm replacing with equivalent or similar strategy index funds.
Quickly, let's go over the names.
Yeah, absolutely. So large cap is very clear. We already spoke about
Nifty
it.
50, value 20.
Nifty 50 value 20 is my replacement for all my large cap actively managed mutual funds.
I think we should show these stuff on screen as well.
Let's do that this time.
Yeah.
For multi cap, great strategy index. So when we spoke a lot about Alpha 50, I then found this multi cap strategy index which tends to be much better than Alpha 50. Name us Nifty 500 multi cap momentum quality 50.
Is there a mutual fund?
There is a mutual fund available, but it cannot be pledged. So that is slightly bad. So what I'm saying is, I hate that NSE is keeping such long bad names for this. Again, Nifty 500 multi-cap momentum quality 50, great index. Returns are at par with Nifty Alpha 50, but historic drawdowns are lower than that. At par or better returns and lesser drawdown than Nifty Alpha 50, making this one of the best strategy index funds.
As a replacement for Flexi Cap.
Flexi Cap, multi cap sort of a thing. Then I have small cap and mid cap components in my portfolio. All of those I am replacing with 3 strategy index funds. So one is Nifty Mid Cap 150 Momentum 50. Great mid cap equivalent, I believe. Then Nifty Alpha 50 obviously is there. And then for replacing or equivalent for small cap funds is Nifty Small Cap 250 Momentum Quality 100.
Oh, I think a lot of names being thrown around.
I hate to be doing this.
So many names being thrown
I'm very
around.
sorry that I am having to do this, but this is how NSE named these strategy index funds. But then, this is happening. This is major for me. I've been investing into actively managed mutual funds. I'm making this shift. So
you're not selling or redeeming your existing investments.
I'm not selling any of my mutual funds. I'm just changing my SIPs.
Got it.
I'm stopping my previous SIPs, and the same amount will start going into these mix going ahead with more exposure into gold.
Okay.
That's what I think I've spoken a lot.
And the lump sums that you have invested, have you tried averaging out in the existing portfolio that you had, or have you done it in the new portfolio that you are building?
It's mostly in the, as I said, in the strategy indices that we spoke about.
From my side also, so we both talked about our current, whatever this week or previous week we had made our investments. Then you also talked about what you're planning to do in the upcoming week.
Correct.
So from my side also, I found this very interesting. You talked about thematic funds also, so it triggered that. So when you're looking into certain themes or sectors, FMCG as a sector has fallen by quite a lot is what I believe. And more so than what it should be. So whenever the market falls, always FMCG is called as a defensive sector where FMCG falls lesser than the rest of the market. But at the current times, Nifty has fallen by 13%, but Nifty FMCG has fallen by 21%.
Which is an anomaly which you want to capitalize.
So I feel it's an anomaly. I understand the risks that exist, that their revenues are not growing, their earnings are not growing because of all the reasons we have discussed earlier, which is let's say the middle class not having the spending power, them feeling the pinch of inflation, and even the new D2C brands and quick commerce coming in and taking a slice of their pie. But when we talked about all of this in one of our podcasts last month, there was one line that we talked about, which is these guys are so cash surplus that they'll start acquiring companies. And minimalist. I don't know if you noticed.
That deal happened.
So Hindustan Unilever, just few weeks after we talked about it in the podcast, they did a massive acquisition of Minimalist for 3,000 odd crores.
So you are betting on these new age startups or new age small companies being acquired by these large FMCG giants and adding on to their portfolio.
So I feel over the long term, whatever disadvantages that they're having now, the lack of internet expertise, internet marketing expertise, or the lack of brands that cater to the younger generations, that'll all be solved through acquisitions because they're so damn cash rich.
Correct.
So with that view, and with the view that in a market falls like this, certain sectors are not supposed to fall by so much. Combining both of these studies, I'm also planning to invest not a crazy huge amount, maybe under 10% again of my portfolio might be allocated as a lump sum.
10% comparatively large.
10% onto FMCG alone.
It's a defensive sector, so that's a learning here. I know it's a risky play, but let's see what happens. I'll keep everyone updated. Now we are all responsible, by the way. Right?
Absolutely.
We made our investments very public here.
Everything is
let's be
live on
responsible
camera.
and keep updating. Not every month, but in a quarter maybe.
I know we have to move on to Nihal's story, But then because you brought up something as a very how do I put this? A bet on a theme like FMCG. I think maybe even there are viewers who maybe do not have understanding of us or context or background about us, thinking, why are these guys only talking about mutual funds? Because great, good stocks have also fallen by 30, 40, 50, 60%. Why are we not doing stock picks?
3 stocks that I'm looking into.
Oh, nice.
Consumer durables, especially. A crazy summer is going to come in. It's being said that Bangalore is going to be hotter than Delhi this year. So, Voltas, Blue Star and Havells. Yes, Havells also has an AC brand under them called as Lloyd. So, these 3 brands or these 3 companies are listed in the Consumer Durables Index. And the bet that the crazy hot summer combined with the 1 lakh crore additional money that the economy will see with regards to the tax cuts. Maybe there is, the 5,000 extra that you're getting every month from the tax cuts. I see some people going and buying ACs on EMI for this upcoming summer.
But I see this like a short-term plan. You're just looking like a swing trade. But
no, this is also more like these stocks, especially Voltas, I was looking into. No way a stock recommendation. Very personal study. I've not even said that I'm going to invest, right? So these, even Voltas has fallen by quite a lot. Good company, good fundamentals. Revenue is growing, profits are good. So Tata company, which I like. So with the study, again, it's a study. Even if I'm buying, it will be for a very small quantity in my portfolio. Would ideally be for the long term. But when people say long term, it's for 3 months.
Again,
when it falls, then it becomes a long term investment.
Anyway, the narrative is in US, like 70-80% of the households are air conditioned, and India it is only 5-10, not even 10%. I think 5-6% something.
And Indians are now going to have money,
right? And they're
extra
going to
money
invest.
that just came out of thin air,
Yeah.
right? That they didn't have 2 months ago. Now they're going to have some extra.
But again, your point being, so you are taking stock or looking at stocks, individual stocks, finding value there and taking bets there. I'll make my story clear there, and I've spoke about this multiple times. My focus today is a lot on options trading and my company building, my startup building. So my long-term investing, I've given it to strategy indices or mutual funds, and that's how I'm taking care of most of my long-term investments. I try to optimize it slightly there. That's why I think I'm moving from actively managed mutual funds to passive index funds, which itself are great strategy indices.
True. So coming to my story, I don't know. I like to keep my at least equity investments and investments into stock market very simple, very basic, textbook investing strategy, I would say. So I have 40% allocation into large caps, 30% into mid caps, and 30% into small caps. So until like 2 years ago, it was very plain vanilla. Nifty Bs, Mid Bs, and then small cap 250. There is an ETF from
Not
HDFC.
really sure what textbook you're referring to. Sounds like a very aggressive portfolio with so much exposure to 60% exposure is to small cap and mid cap. But hey, it's all a subjective, individualistic journey. But
that is again coming back to what we discussed in our last podcast. Also, I'm just 24 or 25. I was when I started building that portfolio, and I have that risk appetite or to hold that portfolio for next 20 years, 30 years also. So I think 60% allocation into that makes sense. Again, considering this is not my only investments that I make, right? This is just into my equity that I'm talking about. Then again, I have my debt allocation. Then again, I have my other outside businesses that I invest into. Not so. While Sharique is talking about building his startup and his investments journey, I also try to do outside the world of stock market. I try to invest into businesses. I don't know. I find myself very interesting into getting into individual businesses, get my hands dirty, build actual businesses with my own hands, and not just invest into somebody who's building a business through equity. So that's altogether a different story. Coming back to
again, the agenda here is to discuss what you actually did during the fall.
Yeah.
Or the last.
Did you invest?
Exactly. So that is what I was coming back to. So while that was my allocation that stayed, market was in a bull run. So I knew for some reason we seen a cyclic manner. For every 4 years there is going to be a major dip in the market, 20 to 25%. That has to happen. There is no way market wouldn't follow that structure. So I saw from after 2019 crash, market hasn't given us a good correction or decent correction. So I was holding on to a lot of debt. I was holding my SIPs from last 6-7 months also.
Holding means you had stopped your SIPs?
Yeah. I was very intentionally...
Since what? 23, 24?
No.
7 months.
5-6 months. So
Okay.
since like you can assume from Augustish, I stopped my SIPs because I knew market had to top out somewhere and it has to give a retracement.
So what basis did you take that call? Was it a gut base, hunch base, some technical base? It was your subjective call.
No. It is mostly we've been trading a lot, and I've been not actively trading right now, but I've looked into the Nifty chart so much and I've looked into the market so much that you get a hunch that market has overstretched so much. So I was okay even if market would go up another 4-5%. I was okay to let go of that 4-5% benefit, because I know if it is going to correct, it is going to come down more than that 5% what I would have left.
So you tried to time the market.
So I tried to time the market, and that has been working out very well for me in my last journeys also. So I intentionally hold on to my SIPs so that I was collecting as a lump sum. And apart from that also, like we do option trading, so I get some profits from it. Then I do other businesses which I run, so I get a lot of money from there. So I was holding on to so much liquid cash, and I was waiting for the right opportunity to invest into the markets, and that opportunity actually came, right? So when mid caps fell 20-25% right now, and even Nifty is down by 15%, so my overall average portfolio came down by somewhere around 21-ish, 22-ish%. So then whatever the liquid funds or the debt fund that I hold, I invested 15% of it. Only 15%.
Okay. When did you invest?
So I think I invested somewhere around January mid. So when Nifty was holding that EM 200 EM or something, I invested at that point.
Again into the same mix of 40% last cap, 30 small, 30
so there
mid.
I have made some changes. So 40, still the allocation is same, 40, 30, 30, but the ETFs that I invest is a little bit different. So I invested in Nifty Bs, Mid Bs and small cap 250 ETF, right? So now I moved down to in large cap, there is Nifty Next 50.
Yeah,
so if you
okay.
remember, I think, what is that ETF?
Junior Bs.
Junior Bs.
Yeah.
So now I've invested 50% into Nifty Bs, 50% into Junior Bs of my 15% of the lump sum that I hold. And then in my mid... Ajay is thinking something.
I'm zoning out.
Again, the reason was I was actually looking into the returns what Junior Bs was making. So it is still volatile than Nifty, but it was giving great returns. And I wanted some diversification, some aggressive diversification, because again, I have some safety net for others. So I wanted some more aggressive bet. So I've divided that. But mid cap and small cap, the whatever the 15% allocation I had went into the same allocation, believing that whatever the 85% whatever is left, I can invest into newer strategic indices funds. So which we discussed, it could be Nifty Alpha 50, it could be momentum funds. I know market feed team and we are researching a lot of strategic indices, right? So I'm just patiently waiting and holding for them to find and give me those suggestions that this is the best strategic index fund you can invest, and I can invest all of my money.
So you're still sitting on top of a lot of cash?
Yeah.
A lot of cash. So there is a reason to it. So even in office, when so many people came to me and asked, have you invested lump sum? A lot. So I've been very vocal in this podcast also and earlier also. I don't see strength in the market anywhere. I still believe there is correction pending, or if I see, I've seen Nifty chart so much or enough that if I know that market is going to reverse, there will be some sign. So I'm okay to lose out 1, 2, 3, 4, even 5% of the reversal to gain a much larger gain. I just don't want or don't like to jump in through, conclusions or investments very easily.
No, I really want to discuss a thing here, right? I mean, I want us to be also clear and audience to be clear of the fact that there are certain people like you who are strongly opinionated, who, and based on those opinions, are willing to take bets. And bets could go wrong as well. And you might feel sad, not feel sad. It's all up to you who you are as a person. And then there is the other approach I think we both are taking, where we are not trying to time the market. We are not trying to become experts or trying to predict the market. We are trying to keep things very simple, continue our SIPs. So what I'm trying to put out is, when Nihaal says this, no one should take it as an investment advice, saying that, hey, market will go down, let me not invest anything more here. I am saying that I'm not trying to time the market. I have been continuing my SIPs. I'm trying to just put in more lump sums, just wanting to accumulate some more units. Market could still go down from here, might bounce back from here. I'm not really trying to time it to an extent where I want to take my investment decisions based on it, unless it is really back-tested with certain very specific rules. But
that's where we need to come back to reality, where we discuss about, hey, so this is the current situation in the market, where market has fallen, where people are feeling the pain in their portfolios. As we started this entire discussion, let's round back into it. People are feeling the pain where their portfolio is down by 20, 25, 30%.
Yeah, and we've been slightly elitist here, saying that, hey,
Yeah.
we had extra money, we have that, and we've been investing more.
Yeah.
But maybe a lot of people are actually feeling the pain. They invested and their portfolio is actually down. They're seeing their money in lows, and maybe they don't have extra money to do lump sum.
Yeah, so
Or even if they have extra lump sum, they don't know what to do.
Yeah. So let's try to split our thoughts into multiple segments and answer all of the questions, or try to take all of the questions there. So the first one would be someone who is seeing red in their portfolio, someone who is doing SIP, someone who is ready to do a lump sum. What should they do right now?
One straight answer for someone who's having a salary is continuing to do SIP. I feel there is no brainer for them to stop SIPs.
Yeah.
So they just have to continue what they're doing. Only the catch here is they have to understand that they have committed themselves to invest for a long term.
Yeah.
So if they are, investing horizon is like 5 years, 10 years, there is no brainer. They should continue their
There
SIPs.
is this data by SEBI. I think it's 1.5-year-old data.
Yeah.
Data by SEBI which says that 50% of mutual funds are redeemed within the first 1 year. Regular mutual funds, not
Correct.
direct, by the way.
So that's where I want to come in with something again. I don't want to sound elitist or idealistic, but I think equity today is overhyped in India. Maybe even because of people on YouTube, influencers famously coming out and doing that. And there's this culture of everyone should and need to get into equity, and that's becoming a culture of sorts. Anyone getting their job and starting to work, even getting some money at hand without thinking more, without having a clear plan, without understanding what their goals are, in what time frame they have to achieve their goals. De facto action is, hey, I have money, let me invest in equity. And that is, I think, a really problematic place, and that is adding to this pain. If someone is planning very clearly, understanding what their goals are, in what time frame they have to achieve, and if they would have invested in whatever in instrument which would take them to their goal, then such problems might not even exist. So I strongly feel equity is overhyped.
Yes, so reality of investing, I think that's what people have gotten to learn here about. And just one point to add here, still even with the current fall, the market has not fallen as much as it fell during 2021 end to 2022 mid, right?
Yeah.
So it's like a new set of crazy investors have come in, even if you're taking post-COVID. 2020 to 22, there was a certain number of people who came in. And even if you're looking at the SIP number, it has gone up from 15,000 crores per month to more than 25,000 crores per month over the last 2 years. So all these additional investors who have not even seen the 2021 crash, maybe they're a bit afraid or bit in pain, but I think it's a great learning opportunity even for them, right? That'll guide you from moving on, or not having that pain, but having that sadness, but not having the pain. It'll make you a bit more open to all of these damages. That
so
you
I
can take.
really feel like putting out the statement saying that having equity is not really a cool thing to do. Only have equity if you really want equity in your portfolio, if you're having goals like that, and if you can have the horizon for that. But if your goals are within under 5 years, 3 years, 2 years, fixed return investments are definitely cool. FDs are cool. Bonds actually give 10, 11, 12% fixed returns. It is cool. So definitely we should not look down upon such instruments as well. So how an instrument becomes cool depends on who you are, what your goal is, and what is the time frame to that goal. Equity is not the umbrella solution for all of your investments.
So expectation to be set right, and right asset class allocation is what you're saying. In fact, we've made a detailed video in the A to C series in this very channel where we created an Excel sheet and you showed off like 5-year plan, what should be the case. And inside that, 8% growth plan, 10% growth plan, 12%, 15% growth plan, and according to your time horizon of investment, where you should be investing, right? We created a great Excel sheet. I'll actually post the link of that video here in the description.
The
I button as well. So I think that's where we should get into few FAQs, right? For anyone who is seeing red in their portfolio, for someone who is doing SIP, we said likely according to your asset allocation and your risk taking capacity, you can continue to do your SIPs. Again, not an investment recommendation, because of the fact that you can get better average prices.
And you signed up for your SIP for a very long period of time.
Yeah.
SIP
That
into equity.
one day, X months ago, you
Correct.
told yourself, hey,
Yes.
I'll do an SIP for 20 years.
Yeah.
Right? Keep having that
Stick
same
to
mindset.
that, yeah.
Someone who is, again, seeing red, has some lump sum to invest in right now. Should they be investing? What do you think?
Very good question, right? I think this is where some subjectivity will come in depending on our stories. I mean, we are people here who had lump sum in hand, and when we told our stories, Ajay, you and me, we started deploying our lump sums at multiple stages in multiple goes. And then there is Nihaal here who did not deploy his lump sum, or has only deployed a very small part of his lump sum right now and is still waiting for a correction to deploy more. So I think, again, given expectation is correct, the plan is to stay invested in equity for a long time. I strongly believe, we should start deploying our lump sums anyways. So how much lump sum to invest? So if you have some, again, making this up, 1 lakh rupees of lump sum available, what percentage to invest when is more like a discretionary call. It depends on who you are and how you look at the market, what your call is.
And whenever you're investing lump sum, there is, let's be real, there is an element of timing the market.
Correct.
Yeah.
Right?
Yes.
You can't run away from it. SIP, you're not trying to time the market. Lump sum, you are timing the market.
Correct.
So if you don't know what you're doing, lump sum, you will get your hand burnt. Let's
Yeah.
make that clear.
So in that case, a very good thing to do is lump sum also, again, going back to the example of 1 lakh rupees, split it to, say, maybe 10,000 each, and spread it across 10 weeks or 10 months, or it's all up to you. It's again averaging
Probability
in some
and
sorts, right?
averaging in some
rather
sorts.
than timing with all in one go or something like that. Yeah.
So for this one thing, when people ask me what should be my lump sum investment strategy, or people call it, so I just say, don't think so much. You're anyway doing SIPs. For lump sum also, don't try to time the market like I do, or some people try to do. Like Sharique said, you have 1 lakh investment. I would suggest split it into 12 parts and randomly put it into every month. Just put the same amount into lump sums, because I am sure that lump sum or the 12 parts that you have divided is more than what your SIP would be, is what at least I believe so. So your SIP is getting continued, then whatever this lump sum is, now you are just investing across one whole year. So if the market is moving up, better move it up. You will have it averaged out. If it is moving down also, it is getting averaged out in the lump sum manner also. So you don't really have to time the market or try to time the market. You have lump sum, split it, invest.
So I think that's where we should wrap up this portion of the podcast. And just one point to add on to Sharique there. I think this is really valuable and going to be invaluable for someone who's starting their investment journey, right? So whenever you see people making content on YouTube, maybe even us, right? We try to educate people on what is a possibility of equity, as you said. But we always try to talk about, hey, there should be a debt component in your portfolio as well. So if you're aiming for a certain goal in your investment life, that is what you should be doing. Always keep realistic goals based on the fact that your equity might outperform, your debt might not perform so much. But that will give you a lot of peace of mind. The investment capacity when the market falls or gives you a dip like this, and the stability in your portfolio that you maybe want according to your age. And also for the fact that, let's say you have a goal for 10 years later, you went into the SIP calculator, did your calculations and saw that, hey, if I invest 10,000 or 15,000 rupees every month for 15 years, what will happen? At 15%, I'll get 1 CR. So even in that calculation, you should understand, what if the market falls in the 14 and a half years time frame? You'll be stuck, right?
Yeah, that's a very bad place to be in. You did all your calculation based on that 15% CAGR number, and you're near your goal. You want to touch that 1 CR, and towards the end of, or while you reach the goal, market fell, COVID crash sort of a situation happened. Market is down by 40-50%, and all your dreams are shut.
And there is only one real way to stop it.
And that is by keep managing your investments intelligently. So while you have this plan of investing into equity to reach your goal, it will never take you to your goal if you keep investing only into equity.
Correct.
After a point of time, you should start shifting your money from equity into debt.
Yeah.
So and where you move closer to your goal, you should have more debt in your portfolio and less equity, so that even if that COVID crash sort of a situation happens in the very last moments of reaching towards your goal, you're still unaffected.
Yeah.
All of these are popular wisdom that a lot of people do not take into account when they are doing their SIP
calculation, their percentage and what their corpus should be.
This is how real life is. This is how practical it should be. Or else that is where pain will be delivered.
Yeah.
Like we said earlier, disappointment and pain delivers when the expectation is not right, planning is not proper, and someone keeps on investing in equity and something, it goes for a toss towards the end.
Yeah.
So,
But
again, planning,
but
understanding who you are, what is your risk profile, where do you want to go, what is your goal, and having a very practical plan towards that, which involves equity, transitioning from equity to debt over time, over horizon, all of those comes in, and that is the only way. Which means that you have to put in active effort to some extent to manage your portfolio.
Yeah, exactly. That is what even now I'm trying to do, right? Now I'm overexposed, like 60% into mid cap and small cap. That is only because I am 25, 26. Probably if I'm 35, probably I would be having 60% into large cap and 40% in mid and small. And maybe once I'm 50 or 60, probably I'll be having 60-70% into debt and maybe 30-40 into large cap, not even mid cap or small cap, or maybe I might consider gold.
Correct.
So the more I age, my risk appetite will fall down. So I have to like diversify my allocation that way that my portfolio doesn't take a hit and I book my profits. I'm not losing them out. Think about what happened in Japan. So they would have invested for so long and they saw 70-80% crash which never recovered. It's a very terrible place to be in. So I think that everybody should understand. With the age, just diversify, and then
I think the one good hope that I have is that all these investors who are actually feeling the pain right now, they're not really feeling the pain. As I said, there's this sad, and the pain is not what they're feeling. So this sadness will make you, will
human.
Will make you more human. Will give you the thick skin to survive the market over the years.
While everybody's sad that way, I am sad that market hasn't dipped another 20%. I just want markets to crash 40% so that I get better opportunity. But I know very inhuman. Very. I know I would be judged for this, but. I'm just young, so I just think in that way. But
you get only 4 opportunities.
I understand
to
the
invest in your lifetime, and that's where we would wrap the show. So thank you all for joining in. Hope you got some really valuable insights. I know very different kind of show. There were a lot of more topics available on the table. There is Tesla coming into India. There is the Jio Hotstar merger and the crazy logo unveil and the random ads that kept popping up for everyone.
So actually, there was one more Jio coins that. Picoin, something that Jio was offering when they browse through their websites. They are quoting at that could be the India's Bitcoin, which could even like surpass Bitcoin in terms of valuation, in terms of market cap, because while Bitcoin has to have minted or farmed using multiple GPUs and a lot of infrastructure, these Picoins or something can be farmed or mined using mobile phones also.
Jio coins and it's being placed or trying to be positioned as a currency within the Reliance ecosystem.
So anyway, there's a lot of stuff happening which we can discuss in
that's where we would that's where we would ideally wrap up today's show. So thank you all for joining in. Make sure you hit the like button if you enjoyed the content. We'll be available on the comment section so that as always you're the 4th participant and you can interact with us there. So let's say good night for now, and hopefully you have a really good night of sleep as well, even though your portfolios are down. So see you. This is Ajay signing off. Bye-bye.
Bye-bye.